Hello, everyone. Welcome back to the Bobby Lee Bitcoin podcast. And today we have Sharnaz. She's a solutions engineer for an automation software, right?
Yeah.
So tell us about your journey in crypto, Sharnaz.
Yeah. Well, to be honest, I'm very new to crypto. I'm very much just diving in the beginning, doing research. I see things, articles on Google and things like that. So I started my journey probably about 6 months ago.
Yeah.
Knowing nothing, just learning from everybody, getting, friends' advice and advice off articles and things. And I decided that, I needed to hurry up and learn if the time is now to invest, right? So I ended up cashing out of my E-Trade, my personal, play money stock market account.
So you cashed out, you sold all your stocks.
Right. Sold all my stocks and decided to jump in. And honestly, was it 6 months ago when NFTs started to become in fruition, right? And,
yes, very hot, very popular.
Right, and metaverse. And then I learned that, you can use crypto in that. So that's when I started buying it. And so, again, not knowing what I was doing, I bought BTC.
Yes, Bitcoin?
Yep, using Coinbase Pro.
Yeah,
And
wow, Coinbase Pro.
Yeah, well, I didn't even know there was a difference between Coinbase and Coinbase Pro at the time.
Yeah.
But, and then that's it. I haven't yet dabbled in the NFT. I'm just kind of, the Bitcoin I noticed took a dip in recent months or recently in the past couple months.
So you bought some Bitcoin and then it went down quite a bit in the last
It did.
2 months.
Mm-hmm.
How did that make you feel?
Wow, I really don't know what I'm doing. Maybe I should have stayed in stocks, but stock market.
The stock market also took a small dive as well.
Exactly.
Yeah.
So
So the price correction in Bitcoin and Ethereum and so on, it's pretty expected. I mean, obviously we don't know exactly which day it'll crash or which month, but the volatility is very much expected. It does go up a lot. It does go down a lot when it does go down.
right.
So it's not for the faint of heart.
I noticed.
Yeah.
You wake up and you're like, what just happened?
Yeah, exactly. And then it'll go more the next day or the days after, the week. You go down more. Yeah.
Fun.
So what do you like about Bitcoin? Or what questions do you have about Bitcoin or crypto in general?
Well, I have a lot of just random questions, but what comes to my mind, I see from articles or photos of people actually physically mining. So what is mining? Is that a physical thing or is it, digital?
Yeah. So digital currency mining, the term is borrowed from the traditional commodities mining. So mining for gold, mining for diamonds. So obviously in the case of Bitcoin, they're not digging through mountains of earth and rubble to find Bitcoin. But rather, it's an electronic process where Bitcoin was designed to have a limit of Bitcoin in the world. And the limit is 21 million. So the whole world will eventually have 21 million. So the key word is eventually. So when Bitcoin was launched in 2009, there were 0 Bitcoins on earth. And then over the corresponding days and weeks and months, more Bitcoin got created by the system. And eventually it's going to hit 21 million. So the process of creating these Bitcoin that's circulating in the users who are using Bitcoin, that is mining. So the very first person to get Bitcoin, you have to use a computer to run a program to do a calculation. And the more people that runs the program to do calculations, the more people are mining. And what happens is kind of like a lottery prize. So have you played the state lottery? I guess there isn't one in Nevada, but
in other states.
In other states, yeah. So a lottery, what happens is many people will buy the lottery tickets, and then someone might win the lottery drawing, once or twice or 3 times a week. And then when they win the drawing, if there's only one winner, then that person wins the several $million, right? However, we may join an office pool. For example, we might say like, actually forget the office pool. Just we could pool together and mine together and then win the prize and share the prize. So that's kind of like an office pool, lottery pool. In this case, a mining pool. So the thing about mining is back 12, 13 years ago when Bitcoin first started, the lottery prize was actually 50 Bitcoins. So today, 50 Bitcoins is $1 million, right? So back then it was just fractions of pennies. So the prize was in Bitcoin amount, it was 50 Bitcoins, but the value was small. Now, over time, the value has gone up, but the price itself has gone down. So what's happening now is there used to be 50 Bitcoins as a price. 4 years later, the price got cut down to 25 Bitcoins. It got cut down again to 12 and a half. So today, the Bitcoin price for the mining is actually 6.25. So 6.25 Bitcoins. And so you'd run these programs. You wouldn't do it. I wouldn't do it. There's professionals who invest a lot of money buying these computing equipment, these mining equipment. They would run the program in a mass factory scale facility and like thousands of machines, and they run the program, use a lot of electricity, and they would get these lottery tickets, and one of them might win. And every time they win, they'll win 6.25 Bitcoins.
Interesting.
Yeah, so it's a very complicated sort of concept.
Right.
Yeah.
So, I mean, with my background just in software and
Yes.
the interest I have in security of data and things like that, how secure, I mean, to start something like this, is there some regulations they have to go through in order to...
That's a good question. So it turns out Bitcoin itself is decentralized, and it's not coming from a central authority. So meaning to mine Bitcoin or to participate, you don't have to get a license from someone. There's no central Bitcoin authority. There's no Bitcoin government. There's no Bitcoin foundation to authorize things. So everything's sort of permissionless. Okay, permissionless just means that you can do it. You can join and participate and buy Bitcoin, sell Bitcoin without getting some central authority to approve you. Now, the United States, countries may have their rules and regulations, but at least Bitcoin itself doesn't have a rule. Okay, so for people to do that, they would just buy machines to run the computer programs, and the computer programs are freely available on the internet. It's all open source, so you know what the algorithms are, what the process is, and then you get your chance at winning the Bitcoins.
Wow. So there really is no stringent regulation. So
not for the mining, but for example, if you do make money from the mining, each country, in this case in the United States, we have the IRS. So the IRS does specify how to treat the income generated from mining Bitcoin.
got it.
So when you make money, you have to report to the IRS, and you have to offset the income with whatever expenses you have and all that, and pay taxes.
Okay. Oh,
Yeah.
very interesting.
Yeah.
I know there's different flavors of cryptocurrency. Of course, we're
Yeah.
talking about Bitcoin, but
Bitcoin,
there's
Ethereum.
Ethereum.
Yeah.
What's the benefit of buying other crypto types, or
Yeah.
why
So-
are there other crypto types?
Well, so do you have a favorite?
I'm in Bitcoin right now,
Bitcoin,
just
okay.
early
Yeah.
stages. Yeah.
So Bitcoin's the most popular. Ethereum is also very popular, and there's a whole bunch of others. Now, the reason there are all these different cryptocurrencies, because when Bitcoin was invented in 2009, it was first proposed as a white paper, as a concept that was shared with some cryptographic geeks, if you will. It was shared in October of 2008. And then it was finally released in January of 2009. And when that was released, it was actually open source. Open source means the software is copyrighted to the original author, but however, people are free to use it and make a replica of it and run it again. So from then on, there are many clones of it. So now there are all these cryptocurrencies that are running out there that are essentially copycat or derived from the original Bitcoin. And sometimes they make small changes, sometimes they make big changes, and so on and so forth. So that's why today there's virtually unlimited amount of cryptocurrencies out there. And there's even Ethereum itself allows you to make more coins from it. Yeah, so there's been a plethora of alternate coins, so to say.
So would I be able to trade? Let's just say I look at the historical stats of Ethereum. Would I be able to trade my Bitcoin for Ethereum, kind of like stocks, right?
Yeah. So you could trade it Bitcoin to Ethereum back and forth. However, the price would be the market price. So over the years, the Ethereum and Bitcoin price have gone up and down relative to each other. Yeah.
Interesting.
So
Okay.
it's a free flow, right? Yeah.
So for NFTs, do they just, I don't know if you know a lot about NFTs, I obviously don't, but do they accept any type of crypto or like Ethereum? Or I think the instructions said you needed to have at least a crypto wallet to start.
Yeah. So NFTs, so let's talk about NFTs first. So you haven't dabbled with NFTs yet, right?
No.
So NFTs are, the technical term is non-fungible token. So the keyword is non-fungible. And fungible, so Bitcoin, Ethereum, for example, are actually fungible. So the traditional cryptocurrencies are fungible tokens.
Okay.
And then what came out in the last few years is this concept of a non-fungible token. So fungible tokens are basically these Bitcoins, let's say, and where we can send it to each other, and it doesn't really matter which one I send to you. It's kind of like if you have a bunch of coins, pennies and quarters and nickels and dimes in a coin jar, and you take some coins and you go to McDonald's and buy a cheeseburger, right? You just count out how many pennies, how many nickels, how many dimes they want. Okay. Now it really doesn't matter which quarter you get or which dime and nickel you get. As long as you get the right amount of quarters and dimes and nickels and pennies, you can pay for the cheeseburger at McDonald's. Do you follow me so far?
Right.
So they're all each coin is different, right? Each coin might have a different year. Each of your penny and quarter may have a different year. For example, you may have used one nickel or five pennies or two nickels and one dime. They're the same value, right? So it's fungible. That's what fungible really means. And no different than the dollar bills in your wallet. The dollar bills and $20 bills, the $100 bills. It doesn't matter which one you use. They have the same value.
Interchangeable,
fungible. And fungible also, so besides being interchangeable, it also has a concept of being, you can break it down and form it back up. So this is sort of like divisible, okay? So when you divide, if you take a gold bar, you cut it up into 4 pieces, and then you melt it back together. It's still one gold bar. Right. In fact, you could have melted different parts together. As long as the gold bar has the same ounces or grams, then it's the same amount of gold, then it doesn't matter which piece it came from. Diamonds, on the other hand, are not fungible. Think of diamonds, like if you have a diamond ring or diamond jewelry or earrings, the loose diamonds, or each one is unique.
Right.
So you can't say, oh, here's one carat diamond, oh, I'm going to pay you with the other 1 carat diamond, because they all have the different flaws and internal inconsistencies and so on and so forth. The diamonds are not fungible. Paintings, for example, similar. So painting, you have 2 different Picasso paintings or Monet, Van Gogh. They might have the same size, they might have the same color, they might depict the same scene, but they're different paintings and they'd be worth different. Right. Whereas red wine, if all the red wine bottles are from the same year, the same vintage, then it's fungible. It doesn't matter if it's this bottle or that bottle, as long as it's the same brand, same vintage year. Make sense?
Yes.
Okay. So now when it comes to cryptocurrency, Bitcoin, Ethereum are fungible. Okay. So you can send and buy whatever amount. So for example, the amount of Bitcoin you bought, whatever fractional amount you bought, whatever amount, it doesn't matter. It didn't really matter who it came from. Was it someone who owned Bitcoin a long time ago, they sold it to you, or was it a miner that sold it to you? Right? You don't really know. So it's fungible. Now, non-fungible, what happened is NFTs are, they call it non-fungible. Usually it's digital artwork, whether it's a JPEG image or like a music file or a video file or a specific location of some virtual metaverse land. And they call that, this has an ID. So the ID to the painting and to the image, to the graphics, to the video snippet, they're all unique. All the IDs are unique and all the content is unique. And then now we're saying, let's use a token to represent that and let's buy and sell that token. So those are NFTs. So think of, you have a digital painting of a Picasso or a digital painting of a monkey, and you're saying, okay, I really like this one more than that one, and I'm willing to pay more for this, and I want to buy this one specifically. So when you buy it, then the seller only has one of this to sell you. Once he or she gives you this token, this NFT, the non-fungible token, then you would own it, and the seller can no longer sell the same thing.
Interesting.
Yeah. Okay. So it's become a more of a collector's sort of universe. People are buying it. Obviously, there's investment potential, but it's a different kind of investment than traditional cryptocurrency.
Right.
Yeah.
It's been interesting. It's a completely different world.
It
seems completely imaginary. You're buying intangibles and digital assets, basically.
Yeah.
Right?
Yeah. Do you have friends who are buying into this?
Yeah, my friends were, but you know what? I feel like it's already been a fad. I don't hear a lot about it anymore.
Well, because the prices have come down. So in the last 5 to 6 weeks, 2 months, there's been a sort of crash in the crypto world. So the NFT price have come down. So the hype has gone a bit.
Interesting. Okay.
Yeah.
Well, kind of makes me reassured that I didn't really put my 110% into it at the
Yeah,
time.
yeah.
But I am still glad that I hold Bitcoin. But there's
Yeah.
still a lot more to learn.
Yeah, Bitcoin is good. I mean, the reason I like holding Bitcoin is that it's what they called it's a real digital store of value. I really believe in it. And I don't know if you're aware, this week they announced the inflation, the CPI numbers, the consumer price index, the core inflation and all that exceeded 9% just in the month of July, year over year. So this is a larger increase than the previous results. And so now they're talking about raising interest rates again.
Oh, wow.
So they've already raised interest rates like I think 2 or 3 times this year, and they're going to raise it one more time again.
Yeah. And so how does that relate to crypto with our economy and inflation?
Well, so that's the idea, right? So think about your money in your bank account.
Right.
If you just have your money in your bank account sitting in there not doing anything, it may make some interest, but the reality is the spending power of that money actually goes down over time. Right? Because what you can buy this year with $100 is actually less than we could buy 12 years ago, or 11 years ago, 10 years ago. Now, is that a good thing for you or not?
Not.
Because what happens in another 5 years, another 8 years, another 10, 12 years, your $100 bill will actually buy even less, right? And it doesn't matter if it's a $100 bill or if it's $100 worth of Visa credit card or like Venmo or like PayPal. So wherever you have $100, the fact of the matter is we predict in 5 years, 8 years, 10 years, you will be able to buy less with it than you can now. So that's why we're saying with inflation, your money does not store its value very well. Wouldn't you prefer if the $100 you have earned through your job or through whatever hobbies, your money can actually retain the purchasing power or even improve the purchasing power? So that's the idea, right? You want to invest your money somewhere sound so that the value of your money, of your hard-earned income, can be useful to you in the future and not just now.
So really, inflation doesn't have a direct impact on Bitcoin.
Well, inflation. So inflation happens in our society today because we keep printing more and more money. So there's actually more money in circulation today than there was 10 years ago, or even 2 years ago. So with the pandemic, first of all, we had about 10, 12 years ago, we had the global recession, right? And then the last 2 years, we've had the COVID pandemic. So for all these sort of economic, issues, the government has printed more money to stimulate the economy. And they're printing more money, and they're flooding Wall Street, flooding Main Street with a lot of money. And that's why we had all-time low interest rates. That's why we have all-time business activity. So the economy is hot. But in doing so, the money's becoming worth less and less. Right. So in Las Vegas here, I call it not only the entertainment capital of the world, but this is a harbinger. The prices here are higher, right, on the strip in the casinos, are higher than anywhere else in the U.S. And this is the harbinger of the prices of what we'll see in the rest of the U.S., whether it's a steak dinner or just a burger.
Right.
Yeah.
Interesting.
So with Bitcoin, the point of Bitcoin, the reason you're investing in Bitcoin is with Bitcoin has only 21 million, so that we think, as an economist, we think that even in 5 years, 10 years later, the Bitcoins will still remain at 21 million maximum. And in reality, as more people participate and come online, we're going to find the price of Bitcoin going up. Yeah.
Would you kind of, at a very high level, categorize it like with silver and gold?
Yeah, people do.
Okay.
People do. People think that, gold, think about gold. Gold was a predecessor, the precursor to today's money that we use, the US dollar. So in fact, gold was used as money throughout human civilization for thousands of years, whereas the US dollar today has only been used roughly, the unhinged US dollar that's not backed by gold, it's only been around since 1971. So only 53 years.
Wow.
Only 53 years.
Interesting.
And then, so that's why people do equate Bitcoin to be like digital gold. It's like the digital version of gold, where it's very finite, very scarce, and it's also decentralized. No one can control it. So the U.S. cannot force other countries to sell their gold or to make more gold or to make the gold disappear. You cannot stop payment on gold, so to speak. Yeah.
Is that so? The hard wallet. Kind of explain to me what
Hardware
that
wallet.
is.
Yeah. So you may have heard of the concept of hardware wallet. So hardware wallets are. So first of all, let's take a step back.
Sure.
How do you hold gold or U.S. dollars? Well, you just put it in your purse, in your pocket. You could put money in your pocket, front pocket. You could put it in your pants pocket, or you could put it in the purse or a wallet. You could put money in there, right? Gold in a bag, whatever you want. So for physical gold, physical U.S. dollars, you just need a container to hold it. Now, for Bitcoin and digital currency, how do you hold it? How do you own and take possession of your Bitcoin? So most people actually don't ever do that. Most people, unfortunately, they leave it on the exchange. I'm guessing that you actually have your Bitcoin on Coinbase, for example, if you bought it on Coinbase.
Yep.
Is that right?
Yes.
Okay, you never taken it out, right?
I have something called a Coinbase wallet.
Yeah. So it's on there. Yeah.
Okay.
So a Coinbase wallet is a software program, a service they're running, and they hold it for you. So it's more of a custodial relationship. So this is the most popular wallet. It's a custodial wallet where a company will have the financial licenses, obviously. In this case, Coinbase, they're even a listed company, a publicly listed company. So they have an account relationship with you, no different than your bank account, like your Wells Fargo, Bank of America, Chase Bank. So you have an account at Coinbase, and then they hold the Bitcoins for you. Now, the reality with digital currency like Bitcoin is you can actually choose to not rely on them to hold it. You might buy it from them, but you won't take it back. Think about when you go to Costco, when you buy drinks and when you buy food. Do you leave it at Costco or do you take it out?
Yeah, take it out.
You want it, right?
Right.
So my question is, if you bought Bitcoin at Coinbase, why would you leave it there? Right? Well, because you don't know how to take it out. Okay. So if you take it out, you would need your own wallet. Okay. In this case, the secondary wallet would be like a software wallet. And the third kind of wallet would be like a hardware wallet. So the first is a custodial wallet, like Coinbase themselves. You don't take it out and leave it there. The second is a software wallet. You might install a program on your phone or on your computer, Windows or Mac. And then you would tell Coinbase to please send, it could be Coinbase or any other exchange, please send the Bitcoins to my wallet address. And they would send it to you. And after a few minutes, it would arrive and it would be on your own device, on your software phone, or on your on your laptop or computer. Okay, this is the software wallet.
What if you lose your phone?
Well, then you have to. So that's why software wallets are pretty
Rare.
No, it's very popular actually. A lot of people use it, but you have to do a backup. If you lose your phone, you have to do a backup of it, and it's a pretty complicated process of setting up a software wallet. And then hardware wallets are even more complicated. Hardware wallets are basically a dedicated device that's not your phone, not your computer. You buy a third piece of hardware, and this hardware would have the capability to store your cryptocurrency. Yeah.
Okay. Is that similar to like a chip in a credit card?
It can be, but not necessarily. Some hardware wallets are like a chip on a credit card. In fact, my company called Bally, we make hardware wallets that look like this.
Oh, okay.
And I don't know if you've seen these before, but these are size of a credit card, but they don't have a chip on it. So we're unique because we purposely don't have any electronic components on our wallets. But most hardware wallets have an electronic component. They have a chip inside. They have Bluetooth. They have USB cables. They have a display. They have firmware, software, and all that stuff. Yeah.
So as a retailer who wants to accept crypto, they would have to have this set up, right?
Not necessarily a hardware wallet, but retailers. So if you're selling goods and services and you're accepting crypto, you can you set up a merchant account. So you may want to partner with a crypto merchant payment service provider. Just like if you accept credit cards, you want to partner with a company like Square or Stripe to process your credit card payments. Right. Do you follow me? Yeah. So if you're a restaurant or retailer, you would do that for credit cards. If you accept cash, you actually don't need to do anything. You just accept cash. If you were to accept Bitcoin and cryptocurrency, you would similarly want to sign up with a sort of payment processor for crypto.
Got it. Okay.
Yeah. So there are many out there.
What does Elon Musk use for Tesla?
For Tesla, I think they do it in-house. They have their own program to do the payment processing.
Interesting.
Yeah.
So they don't have to pay merchant fees, I'm sure.
They pay less. They don't have to pay as much. Yeah.
Okay.
Yeah.
Is it too late to invest? I mean, I see it on the rise now. I mean, what do you
Yeah.
think is good timing?
So I definitely think it's not too late. So I myself, I've been in crypto for over 10 years. I got into it 12 years ago in 2000.
Wow.
Sorry, I got into it 11 years ago in 2011. So now this is 2022. And I've been investing in Bitcoin for a long time. Obviously, we all regret we should have bought more in the beginning, but I've purchased Bitcoin over the years and continue to do so if the price is right. So recently, when the price gone down, I've bought some Bitcoin myself. And the reason I still buy Bitcoin now is because I truly think that the price is not at the fully appreciated eventual price. So when Bitcoin really becomes globally accessible, when there's more knowledge about it globally, adoption. Like you just joined this year, right? So maybe someone prompted you to, or maybe you did yourself, but there are billions and billions of people out there on planet Earth who haven't yet touched Bitcoin. Metaphorically, they haven't even bothered, right? So maybe they've heard of it, but they just haven't started investing the way you have. Very bold, right? So you're very early. You're ahead of. You're probably in the first 100 million, and that's a lot of people. But there are 8 billion people out there. So imagine to be the first 100 million person using the internet. That would have been like 1989.
So should I stop contributing so much to my 401k and save a little for crypto every month? Or?
Well, it's up to you. Depending, you already have some, right? So if you already have some, you can do your own allocation. I tell people, it's pretty safe to only put in 1 or 2% of your net wealth. So think of your whole net wealth, real estate, IRA, retirement account, everything together. If you only invest 1 or 2% in crypto, that's not a big deal. I think that's pretty safe to do. Most people have a large part of their money in real estate and stocks, and maybe bonds, and then small portion in cash, in your checking or savings account.
Do you think it would be in the future for financial institutions to accept crypto as some form of retirement?
I think they would. I think so. I think so. I think it's happening. It may take another 5 years. I think in the next 5 years, you'll see more and more traditional financial advisors and banks and investment banks and all that starting to cater to people who have crypto portfolios. Someone like yourself, someone like myself, right? So we would be good customers and clients for them because, well, they would have to learn how to take care of the crypto, and then they can start managing cryptocurrency for their clients.
Interesting.
Yeah, because I think it's an important part of your diversification. If it's just 1 or 2%, or some people go bold, they do 5 or 10% of your allocation in Bitcoin. Right. In that case, it's more bold. You'll see more fluctuation, but I do believe that it's an important part of every educated person's portfolio.
Right.
You don't want inflation just to eat away the value of your money.
No, exactly.
Yeah.
Right. I know with my E-Trade account, my old E-Trade account, I used to, take out stocks and buy other stocks and do research on other types. Do you do that with Bitcoin also? Like when it dipped in the past couple months, is that time to buy more? When it's up at the peak, do you sell and then wait till it dips again? Do you have that type of trading with Bitcoin as well?
I don't day trade. I do on occasion when the price goes down really fast, I do go in and buy some to sort of what they call catch the bottom, to buy more, buy the dip. That's the expression, right? Buy the dip.
So you continuously build and build.
On occasion. So, but I've been in this a long time, so I have some cash flow. I can do that, and plus, I definitely don't recommend it for people. In fact, even I don't myself day trade because it's so volatile. You get obsessed if you day trade and follow the price every moment of the day, right? So what I suggest is so I wrote this book called The Promise of Bitcoin. I don't know if you've seen it yet. So I'll give you a copy afterwards. So The Promise of Bitcoin is about why I think Bitcoin is the future of money, why it can be a great investment for you, right? For people all over America. And buy it for the long-term aspect, right? I'm talking about 5, 10, 15, more like 10 or more years. Or certainly 5 years might be okay, but certainly 10, 15 years with that kind of outlook. You're not buying it for 3 months. You're not saying, okay, I'm going to buy some Bitcoin and sell it before Christmas time and buy some Christmas gifts for my family.
Right.
That wouldn't be a good move.
Got it.
Regardless of whether Bitcoin goes up or not. It might go up, it might go down, but don't do that. Rather, say buy it for children's college education, for them to put a down payment for their home in 5, 10, 15 years, kind of like that for your own retirement, 5, 10, 15 years.
And there's
Similar.
no tax penalty if I want to cash out in 10 years, like a 401k
Well,
pre-retirement.
So there's no penalty, but there will be taxes.
On
Okay.
the
on
capital
the gains. Yeah. So IRS has already come out over the years saying that if you make money investing in Bitcoin, the amount you make in gain, you have to pay capital gains tax.
Uncle
Similar
Sam
to
wants them. Yep.
similar to for stocks. Yeah, Uncle Sam wants their share,
Yeah.
and it's treated for both short term and long term, similar to stocks. Similar to stocks.
Interesting. Okay. I wonder. I'm just thinking about all my different financial accounts. Like, I wonder if PayPal is going to have a digital crypto wallet of
They're
some
starting
sort, or just so people can purchase and buy things. With
Yeah, you
crypto.
can. That's right.
Yeah.
So PayPal actually, if you log into your PayPal account, you can actually buy Bitcoin and several other cryptos within PayPal.
Oh.
Yeah. Now the only issue is the Bitcoin in there is a closed system, so you can't withdraw it. So it's a little bit weird. You can leave it in there, you can buy it, leave it in there, and then when you sell it, you have to pay tax on it, but you can't take it out. So whereas with Coinbase and a traditional exchange like Gemini or Kraken or Coinbase, you can actually withdraw the Bitcoins. So that's what I recommend using a traditional exchange.
Does Bitcoin, does it fluctuate, or what do you call buy and sell? Is it active 24/7?
Yeah, it is.
It is. Okay.
is. And the reason
people
is
are trading internationally? Sorry.
Yeah, absolutely. And you may not know this, but your Coinbase Pro account is operating 24/7. So the stock market only runs in the U.S. from Monday to Friday, from 9:30 a.m. to 4 p.m. Eastern time. So in Pacific time zone, that's 6:30 in the morning to 1 p.m. Right? That's the stock market hours. So Bitcoin actually runs 24/7. And the reason is because there's no central authority. There's no, like for the stock market, all the clearing goes through like the New York Stock Exchange or the NASDAQ. So I don't care if it's Tesla stock, Apple stock, or General Motors stock. They all go through a single clearinghouse, right? All the stock is at the exchange, all traded there.
Yep.
And it cannot be traded in South Africa or Vietnam, right? Whereas Bitcoin can be traded in all these countries all over the world. In fact, many of the large countries have their own exchanges trading Bitcoin. So in Europe, they would trade against the euro, right? In Japan, it would be against the Japanese yen. In Hong Kong, it would be the Hong Kong dollar. In South Africa, it would be against the South African rand, for example.
And Coinbase can manage all that.
No, but Coinbase is in the U.S., so Coinbase is traded only against the U.S. dollar.
Got it. Okay.
Yeah.
Interesting.
So if Coinbase has a subsidiary in the UK, it would trade against the British pound, as an example. But in the US, it trades against US dollar.
Okay.
Yeah. So you can buy the Bitcoin in US dollars, right? And then if you go to vacation in Egypt or Tahiti or wherever, in theory, you could go there and sell it for the local currency and get local currency there.
Interesting.
Yeah. So it's been used a little bit for tourism and stuff like that, for global remittances and so on.
I've heard it takes a while to withdraw Bitcoin and get U.S. dollars back. Let's just say I have money and I want to withdraw, right? Like, how does that work?
And convert back to US dollars, right? So in your case, you have it easy because if you already have it on Coinbase, the benefit of leaving on the exchange is very easy to just sell it and cash out. So you would go to Coinbase, you would sell the amount you want, either a partial amount, the full amount. You press sell, market price, and then it'll show you the US dollar value. And if it's gone up, then the value of the US dollar is more than you invested. If the price has gone down since you invested, then you take a loss. It would be less than you had invested. And then with that, you can request Coinbase or the exchange to send all that money back to you to your bank account.
Interesting.
Yeah, via what they call either ACH wire transfer or send you a check in the mail.
I heard that specific process takes a while.
Takes a few days.
A few days? Okay,
Yeah.
I heard 30 for some reason, your entire month.
Probably not 30 days. It depends. There's different rules. For example, if you buy it, Coinbase may require you to hold it for 30 days before you withdraw it. There's some, they're trying to prevent fraud. They want to make sure it's really you buying it and not someone else.
Got it.
So that's why they have all these time duration limits put in place to prevent fraud.
That makes sense.
But what they want to prevent is they want to prevent a hacker masquerading as you. Some hacker might have stolen your identity. It's called identity theft, right? They stole your ID. They know your bank account number. They open a new Coinbase account pretending to be you. The hacker might be female, or he might be a guy, and they'll pretend to be you, right? And fill in all your name. They will even know your social security number because they stole your identity, your home address, and all that. And they would buy the Bitcoin. But then, let's say Coinbase didn't put in the limits, they would then just take the Bitcoin the next day. And by then, your bank account has been drained. And the thieves got your Bitcoin, and you can't get it back.
Awful.
So that's why they're putting these 1 week, 2 week, or 30-day limit holds on your purchases.
That's reassuring, just going back to our security conversation before, because if, where is the trust, right?
Yes.
If you put in Bitcoin, where's the trust, and where is my money? Is it going to be safe? How do I know? There's not going to be some data breach.
That's right.
Take all my Bitcoin.
This is it's a unfortunately it's been a big problem in the industry. There's been a lot of theft, a lot of hacking.
Has been. Okay.
Yeah. So which is why we tell people to bring it onto the hardware wallets.
Interesting. Okay.
Is this
sorry.
we have
That's my phone. Speaking of, that's my 401k company.
They're worried that you're buying some Bitcoin.
Right. I just recently switched jobs, so they were probably like, "Where do you want your funds?"
Yes.
Anyway,
Good.
So I think you answered a lot of my questions. The last question, just because I'm a data analytics type person, do you prefer a certain software to kind of track Bitcoin, or you just kind of look at the daily charts from Coinbase or Yahoo Finance or wherever you look?
So there are a lot of places you could look. Yahoo Finance would have prices for Bitcoin. Coinbase would have it. There's an app, a website called CoinMarketCap. So they all track different. They all track, all the cryptocurrency prices. Bitcoin is of course the king of cryptocurrency. So they would all have Bitcoin prices. Some would show all the prices for all the other coins, like Ethereum and many of the coins. Some would even show prices for the NFTs, right? So there's no best one. It's really your personal preference.
Gotcha.
Yeah.
Okay.
Yeah, and by the way, the price will all be slightly different. So if you look at all 10 websites or all 10 programs, at any one point in time, the price will slightly be different.
Why is that?
And the reason is because they're all different marketplaces decentralized, right?
Okay.
So even if you look at a stock market, if you look at the Apple stock, the price of it will change over a few minutes or a few seconds. So even though there's only a single price for it at the New York Stock Exchange and NASDAQ, because the different sites might get the feed slightly slower, slightly faster, so the price will also be slightly different. Yeah, and that's normal. It wouldn't be different by a lot. It would just be different by pennies. Yeah.
Interesting. Okay. So if someone wanted to get started with Bitcoin, what do you say
How did you get started?
that they do? I just researched a couple articles and I opened up an account.
Yeah.
And said,
so go with a
good?
trusted exchange. Go with a trusted provider, and that's probably the best place to start buying some Bitcoin and cryptocurrency.
Got it.
Yeah.
Well, thank you so much.
Okay.
I feel much smarter now
Exactly.
about Bitcoin. So
Thank you, Sharnaz,
it's
for being on the show.
very helpful. Absolutely. Thanks for having me.
Okay. So thanks everyone for joining again for the Bobby Lee Bitcoin podcast. See you all soon.